Hello and welcome to Big Deal. I'm Nisha Podar. Now let's put the spotlight today on OCEN, or Open Credit Enablement Network, which is a digital infrastructure being created by the government to democratize the small ticket credit market in India, in line with the financial inclusion focus of the government. Now, simply put, under OAKEN, gateway small sachet loans to small businesses will be possible by a collaborative network of the front-end apps which are into digital commerce and have the reach, and the lenders which have the ability to disperse loans but do not have the reach. Now, this will reduce the effort and customer acquisition costs for the lenders, which was a big deterrent in serving the businesses with low ticket cash flow requirements. Let me welcome on the show Hrushikesh Mehta from OAKEN, who's right here in the studio with us, and Deepak Sharma of Kotak Mahindra Bank, who's joining us online. Now, welcome, gentlemen, to the show. Now, my first question to you, Hrushikesh, what is the intent through OAKEN, which you're developing, and what is the rollout timeline that we are looking at?
Sure. So thanks for having me on the show. So let's talk about the problem that OAKEN is trying to solve going forward. So one of the major issues is that when you have manual processing of loans or acquisition of loans, there's always a cost, because there's a cost to people.
Yes.
When you do it digitally, that cost reduces.
Yes.
And what happens is then the ticket size of the loans can come down. The second issue is, if you have to have it manual, you have to have people physically there. When you're digital, you can do it completely remotely. You can do it in far-flung areas where maybe lenders don't have a presence.
Yes.
And what that basically does is make small ticket sachet loans available to those who are underserved today.
Yes.
So that was the overall the thinking behind having this done and building it as a public digital good. So the friction of the costs, right? Otherwise, you typically, if a private sector company did this, there would be a cost involved, and that cost would mean, eventually the consumer pays the cost, and that makes it more expensive.
Yes.
Now, in terms of rolling it out, so obviously it's been conceptualized, and typically we do this the same way, in almost every public digital good. And I'll draw a comparison to UPI, which I think everyone is familiar with. So Bheem was built on UPI by the government.
Yes.
To showcase what was possible, because no one could believe you could just have a phone number and your debit card pin and you could send money in 30 seconds as small as 1 rupee.
Yes.
And it would be so friction-free and work so well.
Yes.
So once the infrastructure was created, we said, let's build reference implementations so that the market can see how to use this.
Yes.
So in the first phase, we've built out a pilot with the government e-marketplace,
Right.
which is a platform where the government organizations actually purchase goods, and from small traders like MSMEs who have turnover of 10 to 15 lakhs sometimes in a year. So they are less affluent than even salaried people.
Yes.
So what we've been able to do is, when they win purchase orders, one major issue with MSMEs is they purchase with cash but sell on credit usually.
Yes.
So there's always a gap, there's a liquidity issue.
Yes.
And credit can solve that. So
Yes.
we said, let's try it over there.
Yes.
And we've started giving loans. It's very small, as you know, with anything of this scale, it's a hard grind trying to build it. But we have gone live. We've given about 3,500 loans, about 13.8 crores worth of loans. The smallest loan, and this is what we are most proud of, is 160 rupees.
Right.
And the largest loan is about 10 lakhs, average ticket size 40,000. And you're giving it to the segment. Otherwise, that wouldn't be entertained by lenders if it was a manual.
All right. So very, very important. The ticket size from 160 rupees to 10 lakh. So very wide gamut is what
Right.
you're covering here, Hrushikesh. But one important takeaway for me is it's also in line with what ONDC is trying to create. That is the collaboration of lenders as well as the apps, right?
Right.
So various participants coming together to create that network. Now, let me hop across to Deepak and include him in the conversation. So, Deepak, Kotak Mahindra Bank is one of the few largest banks in the country which has been an early adopter of OAKEN. You have collaborated with them. How does it make business sense for you?
Oh, great. Thanks, Nisha. I think great question, because a lot of people want to jump in the party when it's already crowded. I think we took the opportunity to be in early to understand how this whole construct and the network is coming together, because it's equally important when you are building a new business is to understand the contours of business. Unlike traditional business, which was based on a balance sheet or based on financials, here the underlying credit decision model is very different, because you are looking at the data, which is invoices supplied on the government e-marketplace by small businesses or sole proprietor. So in many ways, this is still, I wouldn't call it a sachet side business, but definitely it's relatively small in ticket size, smaller in tenure, and a very different kind of a credit and a risk model that it takes. So we took this opportunity to be among the first banks to start lending on Open platform, because it helped us look at a new business rule engine as to how should we be looking at this data real time, setting up our parameter of credit approval, and then enabling the real time disbursement of these loans on the platform.
Right.
And we have been able to do all of this as a part of our initial rollout that we have done on Open.
Yes.
I think important part of this is we are seeing very interesting data. Like what Rishi mentioned, he saw average ticket size of 40,000. Obviously, as a bank, with whatever our initial rules were, our average ticket size was about 1 lakh. So we have started to still look at relatively a lower value credit than traditionally we underwrite. And I think a lot of this opens up new frontiers about how we like to build and scale up this business going forward.
Right. So line of credit is the lifeline of all businesses, and why should the small businesses be deprived of that? So that's an important one, Hrushikesh. But how does, so one important aspect is also, like payments gateway created within minutes, you could transact online. Within minutes, now credit can be given online. How does this work? And within minutes, how do lenders really recognize the loan, figure out the credit acceptability and asset quality, and work on those parameters?
Sure. So look, previously it was done manually, and this manual versus digital always is going to come up there. And the only way you can serve large masses of people if everything is completely automated.
Right.
So at a very, like a basic level, there are like 4 or 5 steps in the process. One is, can you get consent-based data? So the user should know that they are sharing their data for this purpose of being offered a loan. Now this data, which will include some platform data, so GEM provides how sellers have been transacting. You could get maybe GST invoice data. You get bank statement data through the account aggregator, which is another public good, which is just launched last year in September. And then you get credit bureau data from the credit bureaus. So these 4 pieces of data can be used to, and they're all machine readable, right? It's all digital, to actually instantly run the credit policy, and you come out with an offer. And that's the interest rate, the size of the loan, and all that. This is shown to the user. They select it. They proceed to do KYC, which can be done via Aadhaar, the Udyam registration certificate. They then provide a disbursal account. They sign an agreement, which can be done with Aadhaar e-sign. And then minutes later, the loan is disbursed. So, there's also the setup of the e-natch, or, to be able to collect the loan, obviously, later.
Yes.
But it's actually within 10 minutes, the money is in the account of the person. And this is the beauty of this, right? So if you actually spoke to MSMEs, it takes anywhere from a few days to 2 weeks, usually, to get a rejection for this sort of ticket size. Now, within 10 minutes, they have money in the account. And that is the leapfrog, I think, that we've been able to, do at a very small scale. And now the challenge is to try to scale that.
Right. So more transactions via the network, that is going to be the real aim. But Deepak, about the credit worthiness, banks put so much importance to the asset quality. How do you do that in minutes? How has your experience been so far? And what, in your view, how will the execution really work, and the execution challenges that you may foresee in this?
No, I think this is a very different business, as I was telling you, Nisha, unlike our traditional business, because of 3 or 4 things. One is, this is all based on the cash flow that we see on a platform, because today, like on a government e-marketplace, any small seller, when he or she uploads their invoice and decides to borrow against that, it can be anywhere between 2 weeks to 2 months. We do know that in the event of borrower either will pay or the supplier is going to pay as and when there is a supply due date. So it works in a very different construct through which these short-term loans against a particular invoice is provided. Of course, we run a set of rules which will only get fine-tuned over a period of time, and that hopefully will bring either lower threshold or much wider access. But I think more importantly, right now, what we were doing initially was we were only offering this to customers who were KYC'd with us. So they were onboarded by Kotak. But in next few weeks, we are also opening it up to non-customers of the bank. That means we'll be able to onboard customers real time along with taking a credit decision data on them. And I think as we compress both these journeys, that's ability to take a decision, but at the same time also onboard customers digitally, I think we'll be able to build a completely new business model of the real-time credit and a real-time customer onboarding, both compressed into one.
All right. A very important takeaway from what you said, Deepak, is that you'll have to create a new model. We'll talk more about that, and Hrushikesh will talk much more about the onboarding process, which is so critical to the success of OAKEN. With that, we'll slip into a short breather on Big Deal, but come back for more discussion on OAKEN and its rollout plans, as well as what it will mean for the credit market in India. Welcome back. You're watching Big Deal, and we are discussing the scope and disruption that OAKEN can create. So, Hrushikesh, critical to the success of this particular network is going to be the onboarding of many lenders. We have a live example of Kotak Mahindra Bank being there. Seven lenders are already on the network, but the apps, the front-end apps, they are the ones who also need to show the exuberance for this.
Right.
So how is that onboarding process going on, and what is the level of enthusiasm that you're seeing amongst the various players in joining this network?
Okay, so we are getting like a lot of interest, but we are purposefully taking it slow, because when you're building something of this scale, you have to get it right? And we're not thinking about 1 quarter, we're thinking about 15 years. So look, there are two pieces. On the front end piece, there's a lot of interest, but we've not onboarded anyone other than GEM, and now we are building a second app called SIDBI GST Sai for invoice financing. But we have a range of use cases where people are already interested, from milk receipt financing, agri-trade financing, even actually to buy a buffalo for dairy farming. So there are very use cases which previously wouldn't have been financed. But that is different from a lender onboarding, which is, where they have to follow KYC prescribed by the master KYC directions of the RBI. So that is pretty clearly laid out. So onboarding is different, right? So onboarding and the front-end apps is something we will take a call in the next 4 or 5 months when we're ready. And, the KYC process to onboard customers, I think Deepak may be in a better position to speak to than me.
So I was primarily focusing on the onboarding by the digital commerce apps.
Right.
Because that is going to be very critical.
Right.
Lenders are ready to disburse, they will assess. But what about these digital apps? What is the interest level there?
So I have over 70 companies who are interested in going live with all the big names that you usually hear of. I won't name them because, they obviously, we've not moved. But whether it's payment apps, e-commerce sites, sites that cater to cooperatives that manage actually when the dairy farmer sells to the cooperative, then they process it and sell it, those sort of apps. Like you name it, actually. The use cases are all over. We have a rural... like a banking correspondent company that says we have, people who can guide people how to use this. So can we create our own app? So the interest is actually very heavy.
But what is in it for them? What is it that they are really coming for?
So look, this is a more complex answer. So today, there are RBI digital lending guidelines, which say that, when you onboard what they call lending service providers, they charge the lenders for this. Now, that also creates some inflation in lending costs for the end user. So while that could continue as a model, we are also contemplating, we need to engage with the RBI for this, is to create currently the model is agent of the lender to the agent of the borrower, where the borrower is charged. And this is a page out of the SEBI book, which has done this in mutual funds, where there are two models, where both can be followed based on the choice of the consumer. Right? So the idea is to surface choice for the consumer. The way that front-end app would make money is either from the lender, or on the other side, they charge the borrower, which today, I'd say very clearly, is not allowed by the guidelines, but that's something
that is going to evolve and that will be formally also established. But Deepak, whichever model we follow, there has to be a little more escalation because of the commission to be given to the ones who are generating those leads, whose business partners are coming on board. So what do you have to say about this collaboration, first of all, with digital commerce apps? How do you foresee it? And also, in terms of cost of acquisition, considering the ticket size is so low, will it be a volume play and will it make sense?
If we reimagine how the lending is getting redefined, probably this is the first stage of what I call it as a lending ecosystem. And when I say lending ecosystem, we always had the payment ecosystem where the payment were there at the point of checkout, where you were shopping and how you availed credit and how you made a payment, be it at a retail store or online. I think we are seeing a similar shift now on the merchant and supply side. Because now every supplier is able to look at, can I avail credit for a transaction that I'm doing and for how long? And I think this completely is going to redefine how the lending will happen. And when you ask this question of the ecosystem, I do see two big pegs on which this is growing in a more short term, while obviously the long-term prospect we can all talk about separately. One is, I think, the whole GST invoice-based financing, because today, while this is limited to Gem Sahay, but we all know the kind of volume that goes through the whole GST invoicing every month in this country. And I think as we are building those railroads, we will see a much wider adoption of consumers coming into play. I think the second big shift we have seen is a lot of e-commerce companies and B2B suppliers have started to look at cash flow-based lending within their ecosystem. So as lenders start to become more comfortable with this kind of a lending model, they are extending the same model beyond what we are running in the confines of Gem Sahay. So it's propelling the market, but it's propelling it in different forms and shapes. And I think the last point that you mentioned, finally, the market will determine what is the right value and the price that is associated with it. So be it the loan service provider or the other ecosystem players who have a large engagement layer, some of them may choose to offer finance as a part of their embedded value proposition. So not necessarily everywhere the borrower has to pay origination fee. At the same time, lenders will continue to be far more competitive for a kind of credit quality or the platforms from where they want to onboard customers. Last but not the least, I would say is that this also is the starting block for lenders like Kotak Mahindra Bank. Because right now we may see that the ticket sizes are smaller, or frequency may not be high, or number of borrowers are limited. But over a period of time, we will see a change in all these three parameters.
Yes.
While we expect more borrowers to come, we definitely would see a higher frequency of these borrowers coming and availing. But most importantly, I think we will start to build an alternate credit profile of these borrowers beyond just their bureau. As we start seeing a lot more of data around what kind of products are they buying or selling and where they are taking financing, what is their repayment record, I think we'll be able to create more such curated products for them.
That's right. Two important things there, Deepak, for this to become much more robust. And the way you're visualizing it is, first of all, the credit profile of the borrowers, and the second, also generating the credit culture in the country, even in small businesses, in hinterlands, SMEs. So, Hrushikesh, in this, the critical bit, and I'll ask you again, commercial space, you did mention RBI regulated models will be something that will be in play. But apart from that, these digital commerce, apps, if they are interested, there has to be more, maybe more relationship building with their own vendor partners. and creating more revenues. So how do you see that this line of credit can be a source of many more transactions and business activities, far much more than what it is showing right now?
No, that's exactly right. And I'll give you anecdotal evidence. So we obviously tested. So we used to sit down with gem sellers and, walk them through the app just to see where they were getting stuck and that sort of thing. And once they started using it, a few, asked us, what else are you building? Because credit is so constrained to that segment that I think, you touched upon credit culture. I think there's just credit starvation for that particular segment. So what we're doing is unlocking this for them. To answer the question, like, why do front-end apps do this, right? So think I'm an e-commerce company. At the end of the day, if you provide people liquidity to run their businesses, you're going to generate more gross merchandise value on your platform. And actually, that is also what our intent is to do on GEM, right?
So GMVs also lead to valuations in these companies.
Right. So, I mean, look, credit has always been the fuel for any developed economy. What we are saying is, look, our top 100 million get served. Corporations get served, but the billion don't get served. So what we're doing is building for the billion. And truly building for the billion, not, not saying that, we'll build for the billion and then build for the 100 million and, you serve 40, 50 million customers. So this is the hard road. It's very difficult because there are a lot of challenges along the way as you go. But this is what we're trying to do, is drive that credit. And if they create a credit imprint and they pay back their first sachet loan, that opens up bigger ticket loans, that opens up more business, and we hope that then translates into more economic development for the country.
Right. So final question, Deepak, and very quick answer to that. You've been in this business for so long. For credit culture to develop where it's under-penetrated, how much time do you think it'll take? Because when insurance came to India, more than a decade back, they said, okay, penetration and it is underserved. But it took just so long for the Indian mindset to change. What is the acceptance of credit culture that you're seeing at the ground level in the Bharat, so to say?
I would say that a lot of people today need a way to prove their credibility. And traditionally, bureau was the only way through which this credibility could be proven. This probably will open up a very different dimension through which they'll be able to demonstrate by borrowing it for a short term, for a defined purpose, where we have an end visibility of what are they borrowing against and how will that get repaid. I think as we build this whole ecosystem between data, real-time underwriting, ease of collection, and full visibility of transaction. In my mind, these are the starting building blocks. On top of it, good quality customers definitely will be ready to get access to probably a larger credit or a longer tenure credit.
All right, Deepak, thanks so much for your views there. And Hrushikesh, thank you so much for explaining and simplifying the whole process of building OAKEN and what is the scope of it. So looking forward to that OAKEN rollout and to fuel the small businesses in the country and also to create that credit culture for the real financial inclusion by democratizing credit. That's what OAKEN is aiming to do. With that, it's a wrap on Big Deal. Thanks so much for tuning in.